Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Thursday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. We've got a good show for you folks today. Of course, we're going to talk about Netflix and their earnings numbers yesterday. We got an interesting ratings change this morning from Tesla, but we want to start off the show with CSX, and they did have some news yesterday. Well, they had earnings 2 days ago. They had some news yesterday, and a very interesting story on the tape last night that we're going to talk about just coming up at 8:35. We're going to have our guest. It's J.C. Peretz, the author of All Star Charts, founder of Eagle Bay Capital. Joel, how are we doing in the S&Ps this morning?
I'm just going to say 2265. That's what I'm going to say for the rest of the week, the rest of the month, until we move away from this level. Tight range overnight, potential triple top at 68 and a quarter. Double bottom, 58 area. This thing is waiting for the inauguration. Crude trading up 52 cents at 51.60. Gold giving a little back, but still over that magical $1,200 level. And silver hanging to $17. Dennis, I got a CSX chart here, and I don't think I've heard you as fired up over a stock in, I don't know, in how many years we've been doing this.
It's just like this market. Like, I can't understand it half the time. So, you look at it here, and, here's CSX, disappointing earnings report yesterday. Now they're going to buy it up 16% here because some CEO might get together with another firm and possibly make a bid. I mean, okay, maybe it's in play, but this seems like a ridiculous move. Now, I am short the stock here. I've shorted some up here. I'm regretting it because I shorted a while ago and it keeps climbing here. So, I don't know, but it just doesn't make any sense to me. But, in any regard, Spencer, give us the headline here that we think is the reason the CSX is moving.
So the outgoing Canadian Pacific CEO, Hunter Harrison, has potentially gotten together with Paul Halal. He's an activist investor, and they're going to target CSX.
So basically saying that it's in play here all of a sudden. So maybe that's the case, but you're buying something up 16% on a rumor. Not only CSX was getting a pop last night, you had a lot of the other rails getting a pop here as well. I mean, is he going to target all these rails? Is that what's going to happen here? Because NSC last night was trading up to 116, 117, closed at 109.97. You saw a couple other ones. KSU was trading up about $1 last night. It's trading up over $2 on odd lots here this morning. So, and then, just looking obviously at, Canadian Pacific itself, I mean, really, it didn't trade at all. So I don't know. It doesn't really totally make sense to me, but the stock keeps going up, and you can't fight the tape on this thing right now. I tried fighting it here, and I'm down. One thing I will say is just individual CSX stock action. It's already traded 1.1 million. It traded a ton of stock last night, and there is somebody, and I don't know who it is, but there is some institution that keeps putting iceberg buys out there, and they keep on buying, and they are relentless. And, why do I say it's one institution? I just never see that many iceberg buys in a row. Now, an iceberg buy is basically an order, and we've talked about this on the show, but if you're new to the show, I'll just quickly explain it, is an order that comes in and shows only the tip of the iceberg. So typically, sometimes an iceberg buy might show 100 shares to buy, but you hit it with 1,000 and it doesn't move. It's happening right here again at 42.75, right as we speak live. Hit it with 1,000, hit it with 10,000. It's not moving. It's just that 42.75 just got hit with another 3,000 shares. Does not move. So, either, there's maybe some investor coming in right now and they want to accumulate a huge position in CSX, because I've been watching this since last night, watching it after hours, already traded 1.1 million shares here this morning. I would bet that iceberg buy order has probably bought at least 5 million shares already. And, so maybe, it's somebody that really wants a stock and they're coming in here and buying it. Like, originally I thought, is this like a bad algo? Because I've never seen an iceberg buy come back this many times in a row for this much stock. But they just keep coming. They were coming last night in the after-hours session. It's come here this morning. This was last night. It was trading 39, 40, 41. It's like coming here this morning, and now it's trading up in the 43 handle it was. So, they're hitting it, 42.80. There it is again. Iceberg buy. Does not move. They're hitting it, hitting it, hitting it, hitting it. they want some stock. So either somebody really does want this much stock, and it's potentially a bad algorithm, but I can't see a bad algorithm lasting this long, or it's just an investor here that really needs the stock.
Couple of comments here. The rail sector. I mean, to me, I don't know.
After a disappointing earnings report.
Yeah, a disappointing earnings report. The rail sector. I mean, pretty soon, aren't we going to have driverless cars taking everything everywhere? What are we going to need rails for? So I don't know. I'm a little skeptical on the sector here.
So was I. That's why I shorted it, but I shorted too soon. I'm taking some heat on this one.
You should have shorted the Norfolk Southern, man. That thing went up to 116.75s, back down at 110. Yeah. But what about? I mean, wouldn't a clearing, if this was, a bad algorithm, wouldn't a clearing firm be all over this and saying, hey, shut this down, or is someone going to arrive at the office at 9 o'clock and find out?
I would think they would have been over. Like the night debacle, which was one of the biggest bad algorithms, but that was such a huge amount of stocks. That was trading multiple stocks, went on for 30 minutes, and that almost took night down. Now, huge speculation this is a bad algorithm. I highly doubt it because, it's something going to run the entire after-hours session in the pre-market too. Probably not. So it probably is somebody that really just needs to buy a lot of stock. Maybe it's that investor that we were talking about. Maybe they're coming in here right now, hours in pre-market, and they're scooping up a lot. Much CSX stock. I went and looked, there's almost 1 billion shares outstanding, and it obviously hasn't even traded close to that. But I would imagine it's traded at least 5 million shares on the buy side. And why, you say, well, how do you know it's the same institution? Because it's the same type of order. It's an iceberg that shows up and doesn't move. I've never seen that many icebergs in one stock, which makes me think it's the same institution that just says, hey, I need to buy 10 million shares of this. I'm going to do it with iceberg orders. I'm going to do it the entire pre-market after our session. It's going to drive the hell out of the price, but I need the stock. And maybe if it does get taken over, maybe this institution is going to make money. But, up 16% here, I'm if I was long it, I'd be selling, and I've even shorted it, but I think, it's a mistake. My short, obviously, I'm taking some heat on it here. 17 years, you're still learning. Hard to fight a buyer like this.
And not looking, I mean, there is not a huge short float either here. So someone's going after this stock. I mean, we'll just have to see how this plays out. The iceberg order is still there, 42.75, 42.80. Pre-market high 43A. The other thing I asked you, Dennis, are they, is there an iceberg on the upside too?
Not really.
Someone having fun with this, just bullying the market and playing both sides of the market, which, is a tactic.
Somebody's definitely bullying the market up, but I think they want the stock apparently. So I'm not seeing a lot of sells, like iceberg sells on the other side. I'm seeing some sells. But for the most part, it's just buys, and you can see here it can't go down. I mean, it's fighting. Even look at the after hours chart. Really, did we have really any bit of a pullback here? Not really, because every time it pulls back a nickel or a dime, somebody puts a bid there and doesn't move.
Consolidation.
If you sit there long enough.
Yep. Bump up to 40. Consolidation. This is based on the 15-minute charts. Bump up to 41.5. They took a little coffee break and then came back, and and then they
It's
took.
incredible.
Yeah, but we'll keep an eye on this one. This will be one that we will probably talk about as much as NVIDIA over the next couple days.
In my 17-year professional trading career, I've never seen an iceberg buyer that aggressive in the after hours and pre-market.
What about?
I'm telling you, it's one investor. You can say, "Oh, you're nuts." I'm telling you, I can tell by the order flow. This is what I do. 17 years I've watched order flow. This is the same institution. Somebody has bought 5 to 10 million shares of this. Maybe it is going to get taken over. Maybe they know. Or maybe they're the people that want to take it over. If this really is a bid coming in here, maybe that's going to happen. That's why it's hard to speculate and say, let's just sell this guy's, nuts. Because we don't know what this person knows, what this institution knows. All I know is they want to buy a lot of stock. It's coming in right now, though.
Yeah, no,
coming in pretty hard.
I just mentioned the float is not a high short float here, so this could be just a new buyer, aggressive buyer here, but we'll certainly keep an eye on CSX today, and starting to come in a little bit, Dennis. 42.
No, it's right back though. Look, the iceberg's back again. They come in, they buy more. It pulled back 10 cents. I got to buy another 100,000 shares.
Yeah, just wait. Just wait till some there's some institutions that are going to come in and take this puppy out here.
Well, they have been too. There's other institutions selling. Don't kid yourself, because there's not a retail trader or prop traders that are hitting stocks for 100,000 shares. This thing's traded 4 or 5 million shares from 40, 41, 42, 43, and those are longer term institutions that say, Singh just had a bad report. I'm selling some stock here at 40. I'm selling some stock at 41. I don't see any takeover on the tape. I'm selling some stock at 42. And just like I was saying, if I'm an institution, things up 15%. I mean, okay, it gets taken over. How much premium is going to be there? I don't know if there's even that much more meat on the bone. So, a lot of speculation here in this stock happening right now. Ethan G saying definitely a hedge fund taking a big stake, and I agree with you, Ethan. Somebody is taking a huge stake in this right now in the after hours and pre-market session.
Wasn't there a step up buyer in Coca-Cola, or was it Walmart a couple
see
years?
It every once in a while, which is not that aggressive, like where they come back again and again and again. I mean, it's come back like, I don't know, 50 times. I've been watching this thing for the last, I watched it till 8 o'clock last night. I've been watching it this morning. It's trade 1.3 million. I'll tell you, most of those 1.3 million shares have traded have been on the buy side from that iceberg. I bet you that iceberg, 1 million of those buys of that 1.3 million. So maybe somebody just wants a stock.
All right.
And they're buying it right now.
42.66. That's the last print, up 5.78. Let's move on. We got some earnings to cover.
Yeah, there is some earnings reports here. Last night, the huge one. Let's go grab the metrics from Netflix from Spencer Israel. Spencer, how are you doing? And what did Netflix do last night?
They just keep on killing it. So as far as the numbers for your Q4 adjusted EPS, 15 cents versus 14 cents. They see Q1 2017 EPS at 37 cents versus an 18-cent estimate. Streaming revenue $2.5 billion. They finished the year with 93.8 million users. They added 7 million net new subscribers last quarter, about 5 of which were international and about 2 of which were domestic. So they keep on getting new subscribers. They just keep on trucking.
Hey, interesting point from Ace here. Remember, I had the 7-for-1 split, and he's saying 142.85 would correspond with the old $1,000 level in Netflix prior to the split. So cool math by Ace there, and he's saying it's trading there right now at that old, what would be a 4-digit psychological level. I'm not sure it applies when the stock actually, obviously did the 7-for-1 split, but still cool that this would have been $1,000 now if it would have never done that 7-for-1 split.
Just a couple notes here on the Netflix before we get to the technicals here. Just out of curiosity, took the look at the 144 calls. If you would have bought them on the close yesterday, looking for a big move in Netflix, you would have paid $2. And you know what? You're going to be looking at losing money here. You predict a 12.
So hard.
12 point. Unless you could have sold stock. We've talked about this tactic here. If you could have shorted stock against it in the after hours anywhere above 144, I think that's what you have happening here. Now, I just looked at the crazy consolidation around 144, considering all the volatility. So I think someone's targeting that level as an exit. High for the day. Could be in, could give some back, but I'm not going to touch it on the short side here for another day or two. 146 pre-market high, kind of leaking here. I like to see if it gets back up at 144. I think that's going to be a good level on the upside.
I mean, you just look at this thing, and options are so hard to make money buying them because you're right, Joel. Here you are. If you were buying those 144 as you were saying, were $2.
Yep.
Yeah, so here you are. You call the stock right. It goes 7% in your favor, and you're still probably going to lose money on it. That's why, those weekly options, those short-term options is so hard to make money when you're paying up the premium because you got to be really right. It's not good enough to just be right. You have to be really right, and it just doesn't seem to happen enough. Over the long haul, I think you lose money buying those weeklies. And, we've had Faria Hamzy on the show saying it before, too. In the long run, it's really, a losing proposition, it feels like. The odd time you're going to get one right, the odd time it's going to work out, but just in the long run, if you're doing that all the time, buying those weeklies, that premium just eats you up.
Just even going down to the 140s here, you would have had to pay around the 350 area, so 143.
Losing on that too.
Yeah, you're breaking, you're breaking, not even breaking even.
Not
here.
even breaking even.
Yeah, tough. Nice move, though, starting to leak a little bit. Well, we'll see what happens in Netflix.
I'm not going to give you any technicals on Netflix. I've not liked Netflix for a long time here. I've not liked it since $100. It's 144 here now, so it keeps going. So I'm glad I'm not short it. Also reporting there last night, we had a couple stocks. CP did report earnings as well, and we talked about that already. Can you just quickly give us this Canadian Pacific report there? Because the CEO is causing all the stir over at CSX. Spencer, what are the CP numbers?
Q4 adjusted EPS $3.04 and sales of 1.6 billion. And these are Canadian dollars. So 1.6 billion Canadian dollars. And
Making fun of my dollars.
no, that's well, sure, yes.
No, it's so just looking at CP here. It hasn't really traded much. It was traded down about $1 last night. It's just kind of hanging out here. But like I just look at this. I guess if they make a bid, it's different. But here you are. You're losing this so-called CEO that's going to drive CSX up 16%. CP doesn't trade down at all on it. I don't know. It doesn't even make a trade. So all of this just looks weird to me. This whole CSX move. But I keep going back to it.
No, that's okay.
Flabbergasted. There's a big word for you.
Nice range yesterday, 144 to 146. So we're trading down here a little bit. See if we can get back over 144 to rally. If not, I really don't see any good support until the lower 142 handle. 42.36, that was a low on the January 4th. And then the previous day's low there was 41.32.
Okay, jumping over into the ratings changes here. There's been a ton this morning. I want to start with Tesla, though. And here's another one, which I kind of shake my head on. I mean, it's stock I had right. I was saying on the show at 228, I thought it was going to fill the gap to 240. It did get up there for the last couple days. Now it's breakout city over 240, though, because Morgan Stanley with some analyst action. What did Morgan have to say?
They are upgrading Tesla to overweight and raising their price target to $305.
Big price target, $305. And everybody coming in here right now, Joel, it's up 9 points on $9. Man, this has been an incredible run here for Tesla. Just quietly, Tesla has had a hell of a month and a half. 180 back at the beginning of December. Now 250 almost here this morning. I mean, you talk about psychological levels. I think 250 probably comes into play. No?
Let's see here, pre-market high. First, you got to take out the pre-market high, which we're pretty close to, 248.66. So there's one target on the upside. 250, that's a psychological number. Just 250, like someone when it went down to 180, you're like, if it gets back to 250, I'm getting out. So that's why that's a level. Getting back to your highest level here since April of 2016. Now, April was a bad month for it there. So if you want to go back to your dailies, then you can find some levels there. But already a huge move here, not backing much off the high.
Jumping over here to the other ratings changes here. We got ExxonMobil, and then we're going to get into the Goldman because Goldman was really busy here. But ExxonMobil getting downgraded to sell at UBS here this morning. I tell you something, man. ExxonMobil is finding support here, and it's trying to take it out this morning. Multiple lows right here in this area, though. 85, 86 was the low just from 4 days ago. Multiple lows around 86, like 1, 2, 3, 4 times bottoming in ExxonMobil within a nickel of each other. That's pretty incredible there. Now it's, kind of hanging out here. 85, 80. It's a big downgrade to sell here from UBS. So, you think that put pressure on it, but takes that out. Maybe it does open up to 85.
Yeah, it does. Absolutely nothing in that 85 handle. If we do go into rally mode, see if it can go green on the session to close at 86.28. And wish I'd been looking at this one. 3 out of the last 4 highs within 3 cents up at the 87.40 area.
And then Goldman Sachs, holy cow, they were busy here overnight. They are downgrading Target to sell. They're upgrading Mobileye. They're upgrading Panera Bread. They're downgrading a couple of those GNC and VSI, those vitamin shops there. Let's jump over to Target because I feel like Goldman's a little bit late to the party. Obviously, Target got hit hard yesterday on their guidance and TGT. We talked about the 66 support. Couldn't quite get there yesterday. Got down to 66.35, so bounced a little bit ahead of that support. That's where it's bouncing here again. Well, it's not really bouncing. That's where it's hanging out here again this morning on the Goldman downgrade. But it's a little bit late to the party. It's a little bit chasing price. Goldman makes a lot of bold calls, but this one's not that bold because this is, just kind of chasing price.
And let's see what happens. You did get a pre-market low right at 66 even. That's where this whole move started from, 66.01. That was your low on November 9th. So, better place to cover short than attempt a long. That's what I'll say on that one.
And then Mobileye. Let's jump over to this one. What are they going to on Mobileye, Spencer? Was it till buy?
Buy, and they raise their price target to $50.
There's a big jump here from Mobileye, and I'm not surprised getting a good jump here because you get a broker like Goldman saying buy the stock. It is very influential there. We haven't had a little analyst action on Mobileye in little while anyways. 42.02 is where it closed, trading 43.50 here right now. So breaking out over the high of the last couple of days here. Joel, give us some technical.
Spotty area of resistance. 44 is your pre-market high. This stock is getting back to levels that it hasn't seen since September of last year. And it had a bad September. Went from 50 area down to the lower 40s. So look for some intermediate areas in between. Go to your dailies and just maybe not so much one single high, but if you could find any double or triple tops, that map might pose as a little resistance. And I wonder what this is still a big short of Andrew Left, right? I thought this was his short recommendation of the
Can't
year.
remember.
Yeah,
Is Citron short this, Spencer? Can you verify that?
I don't remember, but I can look.
Okay. All
Spencer,
right.
go hunt that down.
Yeah, I think he is. I think he is. Or I should say, News Desk thinks he is.
Just over, sticking with the Goldman ratings. Also, Panera Bread, PNRA, getting upgraded to buy here this morning at Goldman Sachs. Again, a little bit late to the party, but not so much. This thing's been in consolidation station. I call it the honey badger of the restaurants because it's come out with some bad news before and they just buy it right back anyways. And here you are at Panera Bread, and a lot of other restaurant stocks, have not fared that well. This stock is right within striking distance of all-time highs. I mean, you're at 220, the all-time high on this stock, 224. We're at 215 here. This morning, 216 in the pre-market. I think it's just like consolidating. It looks like it's been a really tough short, which makes me think eventually this thing might go. So I'm kind of on board with Goldman on this one.
All right, odd lot traded up at 216. That takes out yesterday's high by quite a bit. I'll just give you a couple levels to keep an eye on. Just above this, you had two highs at the 216.60 area, and then another high above that level at 218. That was back in November 23rd. But that 216 print, I think, might even be an odd lot there. 10 shares traded up there at 216. So up on the Goldman upgrade, but very, very light volume.
And then also VSI, they are downgrading that one to sell, and they are also downgrading GNC to sell. So they're not liking your vitamin stores there. GNC trade down 5% here in the pre-market on the Goldman downgrade. I mean, it's been ugly here. Same thing for Vitamin Shop. It's trading down here in the pre-market. Actually, it hasn't traded yet, but it's offered down at 22.65. Best Bid's way down at 21.30. I'd imagine they probably knock $1 off that here too. On the Goldman downgrade, both these stocks have been ugly, but this is something I've talked about before. I can remember talking about GNC a few months ago and saying, you think about stocks, that Amazon's eating their lunch. Well, very easy to buy vitamins online, no?
You could exactly. I mean, it's the Amazon factor here.
Oh yeah.
Trade 1055 and quite could you were thinking this thing was going to hold the 1075 area. 1029. That is your all-time low. So that could be a target on the downside. Man, this thing has just been ugly since its IPO. I mean, this thing, no, not IPO. I'm just looking at the weekly here. It's been very ugly since 2014 here.
$60.
Yep.
2014. It's now 11, and people say it's cheap, but I think it gets cheaper.
1029. That's the all-time low in GNC. And then what's Vitamin Shop? You said
VSI.
VSI. Let's take a look. Another ugly chart here. This has a level. This has a 2-day low to look at 21.91. That's still a buck away.
In 2013, the stock hit $65, so now it's 22. I mean, they're cheap here, but I just think Amazon is all over these companies here, and that's why I want no part of these things. CSX keeps going up, guys, up another $1 here. So by the time we finish the show, it'll probably be at $45 the way it's going.
Go long, Dennis. Turn around.
It's like in the video. We gotta keep giving the CSX update. The stock that was absolutely hated here for a long period of time was hated yesterday. Everybody who sold it yesterday must be pounding their head against the wall. I'm pounding my head against the wall. I'm sure Glide didn't add to this short, and I should have covered it, but I'm on the radio.
Go with them, Dennis. Go Iceberg at 43.45.
I know, it just keeps going up. You can't stop. You can't fight this guy. They keep buying it. It's 2.1 million shares have already traded, so I have no idea what the hell's going on.
Another million just traded, right? Didn't you just say 1.1 million?
Yeah, another million just traded. Oh, yeah, they just buy. Joe, he's just buying like 100 million shares here in the pre-market. It's crazy. I'm telling you, man, this Iceberg order is hungry. It's still the same order. Keeps getting bid and doesn't move. And then, it'll move, it'll get hit, and then it'll just come back with another Iceberg bid. I've never seen an aggressive buyer like that. Not that aggressive in the pre-market. Sometimes, you see stuff like this in the regular session, but in the after hours and pre-market, this guy's been really, guy or girl, has been really aggressive and hungry for CSX. We have so many ratings changes here, so let's jump out to some other big ones. Coca-Cola getting downgraded here at Wells Fargo. Is this from outperform to market perform? This is an interesting one here because Coke, we've seen multiple downgrades on it, but there is value here in Coke. I mean, 3.41%. I think can you get the lower 40s? I don't own any Coke in my investment portfolio, but I'm interested in the lower 40s. So here we are, 4107. Stock gets in the lower 40s. I think there's just underneath demand from value investors there. 3.41% dividend. The dividend's safe in Coke, in my opinion. So I think, you find buyers here in Coke. Hard knocking it down.
We got some aggressive traders here. We have Stock Hunter. He shorted Netflix at 143, and it's below 142. So good call on that one. Let's see if he can bring it in here. 142.16 print, and Ace is thinking of shorten CSX. He hasn't put in
Ace, help me out.
Come on, Ace. Come on, Ace, help us.
I'm not saying anything to do on CSX here because I'm getting the beats on this one here this morning. It happens when you're trading to get the beats. I should have had an out, but it was a smaller position. It was about a quarter of my regular size. And I was like, well, what can happen? You're trading in a small size. I'm just gonna let this go and see what happens. 17. Don't let things go like that. Get out. You can't fight the tape here, and I am totally fighting the tape here by shorting CSX right now because this thing is straight up.
So where would you rank? Where would you rank this with your Allergan trade and your Janus Fund trade?
They happen every once in a while. And you know what? It always happens when I'm doing small size. Always happens because when you do your normal size, you're like, oh, I can't take that kind of heat. But when you do small size, you know this too, Joel. You kind of like, you get comfortable. It's like, it's a small little position here. How bad can I get hurt? I'm literally about a quarter. I'm less than a quarter of my regular size on this. So you look at it, you think, how bad can you get hurt? I'm just not going to add to it. And we'll see what happens. Yeah, we'll see what happens. I'll watch it go 2.5 points in my face.
I'm sorry. I don't mean to be laughing.
I'm laughing at myself here, too. So maybe it's going to get over at 60. I'm going to vomit on the screen.
Dennis, maybe you should stop laughing and start getting out.
Scott Spencer. They just got to buy it, I think. I don't know.
I told you to buy it at 43.40. I'll tell you.
18%. Is there news? Like, is it taken over officially here? Like, what the hell's going on?
They should.
This is the CSX show, guys.
Scotia Bank upgrades it to sector outperform, price target at 33. So Scotia Bank, boy, they're quick on that one.
When Morgan Stanley.
Scotia Bank. What'd you say, Spencer?
Morgan Stanley upgrade to equal weight, price target 37.
They're upgrading it because the price target was above yesterday's close, but now that looks like a sell with a price target of $37. It's great. Scotia Bank, I get this, messages. You gotta watch these phishing, messages. Cell phone message comes to me from Scotia Bank, and that's obviously not from Scotia Bank, but I have a Scotia Bank account because I'm Canadian, and I had a lot of friends that had this too. You must see this in the States every once in a while too, but it says, what does it say here? I'm trying to find it in my thing. I think I erased it because I was scared. Anyways, it says your Scotia Bank account has been compromised. Click here immediately. I'm like, I am not clicking that. And then I had a friend he's like, I don't even have a Scotia Bank account. I got that message yesterday. So I always watch out for those phishing messages. They're looking for your information. So when you get a random message from some random number that says your bank account's been compromised, it's usually not compromised.
Wasn't that there was one Canadian bank you wanted to short? Was it Scotia Bank? I remember you talking about it a while ago.
This thing's been straight up too. You can't short banks in the Trump environment. Look at BNS. That stock got beat up yesterday, but it's been straight up.
Wow.
Yeah, I liked them. When oil was going to zero, I thought when oil kept going down, 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 I was like, well, these Canadian banks got some exposure, but obviously oil's come back a long ways from those lows now. But when oil's back at like $27, I'm like, man, if oil goes to 15 or 20, some of these banks are going to take some, there's going to be some bankruptcies happening. Oil's come back a long ways here, and the banks come back along with it. The oil market is like 30% of, the Canadian market up there. So when you see, the oil rally, obviously it's good for the Canadian dollar to a certain extent, and also, good for the Canadian banks. So oil comeback here has helped the Canadian banks.
All right, just real quickly, GWRE coming from Downward Dog. Let's take a quick look on this. This one looks like it's maybe gearing up here. You had a bump up from under 40 for 48, and little consolidation, another bump up again, little consolidation as well. I'll tell you, on the downside here, I would not like to see it take out 52.40. That's a double bottom area. Coming back on the upside, let's see if you can clear 53.40, nearly identical range today. So see if you can catch it one way or another, breaking up above 53.40 or breaking down through 52.50.
There's so many rating changes here today. A couple other ones. Verizon catching an upgrade from HSBC here this morning. A stock we haven't talked about for a while. I had this one right, obviously. I said, it's running up ahead of the ex-dividend date. I shorted it the next day, exactly what I'm supposed to do. I just scalper blood. I covered too soon, but it's come down 2.5 points. It's done that 50-cent dividend there. So there was at least 2 points on the table. If you knock off the 50-cent dividend, AT&T, same story. It's come off significantly there. But now you're getting upgrade here this morning. Stocks trading up about 20 cents here in the pre-market. What do you think? 4.4% dividend. Is it down enough, or you want to see more of a pullback in Verizon for you?
You helped me out with a nice AT&T short on that one, Dennis. I thank you on that one. I went with the 43 puts on that. I felt like I was almost cheating, because it was going dividend. But of course, they factor in the dividend to the price. But it worked out nicely. It was no heat. All I can tell you here about it, Verizon, is there's some institutions, group of institutions, and the higher 52 handle. I'll just give you the last 5 highs: 275, 289, 290, 289, and 283. You got a quick tick up to 52.73. But now you're backing off. So just, man, I can't. There's too big of a wall there at 53. On the downside, 52 has been the low since going ex-dividend.
Citigroup getting bearish to steel stocks here this morning. They are downgrading both X and AK Steel. AKS, they are downgrading to a sell. So you're looking at AKS this morning. It is trading down 2.78% here. Had a nice green candle yesterday. A little bit of money coming back into the steel stocks. They're down here again. I think I'm fading Citi on this because just looking at it here, looking at X, big money coming into it yesterday, had a nice $3 pop. Now you get the pullback here. I kind of thank Citi for the pullback here. I think I might actually even look at AKS here. I don't think it's going to get down to that double bottom at 940 here, but you're getting back half of yesterday's move. I'm interested in buying AKS here. With the stop up below that double bottom there down at 938.
I'm not sure about this one. I mean, you had the big bump up yesterday. Wilbur Ross comments that, moved the stock on the, so this is still moving on the Trump. I don't know. I'm not going to make a wager on this one. I'm still smarting over that J.P. Morgan one, but I'm just not such a confident buyer here in the steel stocks. Before we take a break, we got J.C. Peretz from All-Star Charts coming on here at 8:33. It's been a while, but let's just talk about a stock from yesterday. And, man, if you were trading Mellencrot and you didn't lose money, then congratulations to you. It got hit. It rallied up. Now just quiet consolidation. Wow. Yeah, it got halted and then came back. I'm just looking at the chart here. 49 seems to be the resistance. After a wild day and something like that, I like to look at the closing price just to see where the Bulls and the Bears are finally going to make a decision, and that was 46.53. So good to go. And then Gilead, I think that's what they wanted to look at, GILD. Quiet consolidation, hanging out at 72. That wasn't as much affected. Just hanging out. I mean, long consolidation. I mean, the good news is you could say, there's a lot of support, institutions accumulating it. The flip side of it, man, it's just hanging above the low of the move. And if it takes that out, continued downside here in Gilead Sciences. Dennis, you want to make any comments on either of those issues?
I still own Gilead in my investment portfolio. Like I said, I like it long-term. Short-term, it's just out of favor.
All right. It is 8:35, and we're going to bring in our first and only guest of the day, J.C. Peretz of All-Star Charts. We'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, and we have JC Peretz on the line. He's the author of All-Star Charts. JC, how you doing on this Thursday morning?
I'm doing well, guys. Thanks for having me again.
Welcome back. So far, 2017, a little continuation of the Trump rally so far. Let's just get your assessment here. I mean, I know you like to talk about other markets besides the U.S. markets, but what are you making of this quiet consolidation here in some of the broad indexes?
You know, I can't really take that as a negative, right? You know, we've had a monster rally, particularly from July, well before any election, U.S. or otherwise, and then and then we've been consolidating, like you said, you know, in most of the major sectors and averages, really over the last 6 weeks or so. But look at the Nasdaq 100; it's not grinding sideways; it continues higher. You know, and you talk about some of the global averages. You know, look at the London FTSE 100 breaking out to all-time highs. So while some of these indexes, yes, are consolidating sideways, I would argue, one, that's healthy, but what else is happening, right? The world does not revolve around one index. Look at the Nasdaq 100 continues to break out to new all-time highs. So, you know, I would look at it as extremely constructive, and I see little reason to be bearish.
All right, Jason, go ahead,
as an asset class.
I just want to ask you a stock like Microsoft here. Like, it's had some quiet consolidation here. You know, the Qs have been somewhat strong. You saw some tech stocks strong here. Microsoft just quietly consolidated in the last, you know, month here around the 62, 63 area. Do you look at a chart when you look at something like this is consolidation to go higher, like digesting the previous move? Or how do you read a chart like Microsoft?
Yeah, 100%. I think we're going to 75 in Microsoft. It's one of my favorite names. You know, technology in and of itself is, you know, the strongest sector in America, maybe the world. And Microsoft is one of the biggest components. I think it's great. I mean, listen, new all-time highs is not on my list of bearish characteristics. You know, I mean, it's that simple. And yeah, I love it. You know, we had a short-term target around $63. That was hit. And we've been consolidating in a very healthy way. So it's hard for me not to take that as constructive. I like it. I like the whole space, really.
All right, JC, you like to make calls on the interest rate and the interest sensitive market, and you make a call and you stick with it. And when I was speaking to you yesterday, I mean, you're going to make a call here in the bond market. Tell us what you're looking at, what your targets are, and how you're playing it.
Sure. You know, I've been looking at specifically around 2.4 on the on 10s, which right now we're above. So, you know, 2.4 on 10s is really my level. If we're below 2.4 on U.S. 10-year yields, I think you can be long bonds. I mean, for me, that's really the trade. And if we're above 2.4, I see little reason to be long bonds, right? So that's really the trade. So right now, I'd kind of stay neutral in the bond market and kind of sit tight and wait. But if the 10s start rolling over and start taking out last week's highs, I think you're getting a nice little bond rally. And if we don't, I think that would be constructive for rates and would be evidence to stay away from bonds. And you know what else I would look at? I would look at the 5-year yield. The 5-year yield has really been the tell in the bond market space for sure. You know, look at that 105 area in the 5-year yields. That was the failed breakdown in yields at the beginning of July that really got us so bearish of bonds. Obviously, as you guys know, that worked out real well. So now we're kind of looking at the same thing. So if you're looking at the 5-year yields, look at 1.7%. If we're below 1.7%, I think that's the signal to be long of bonds. If we're above 1.87, I'd stay away. So the beauty of it is that the market rarely gives us such well-defined levels. But since you bring up the bond market, it's actually a great example of, you know, the market kind of setting it up so that we have very well-defined risk management levels. So we don't always get it, but we'll take it.
All right. Even with the market up here at all-time highs, you still have some things on your buy radar. Let's start what you're looking at here in the internet sector.
Yeah, I mean, I like the internet. You know, I mentioned that I like technology. You know, Facebook is a stock that I like a lot. You know, if we're above 121, I think it's a buy all day. I think we could see 150. I like Netflix. I've liked Netflix. This is nothing new. I know, obviously, it started ripping last night, even more so on the gap higher. I'm actually trying to pull up the chart as we speak.
Got up to
142.
got up to 146. Kind of a leaking now a little bit, but that's a
Yeah,
nice surprise.
I think we got a target about 166, right? That's the 161.8% extension of this entire consolidation that we've seen over the last year and a half or so, the last 16, 17 months. So yeah, I think this is an area where we need to be buying every dip. It's an area that I really like because I mean, I really like consumer discretionary. This is a space that I think is really turning around, and Netflix obviously is a great consumer discretionary stock, not technology like some like to call it. And I like the space a lot.
And also, just talking about the consumer discretionary sector, what's on your radar in that area?
Well, speaking of the internet, Priceline. Priceline looks great. I gotta tell you, it's a high price stock. But I'm trying to pull up the chart as we speak. Here we go. I mean, it's a relatively high price stock, right? So it's kind of not on the radar of a lot of people, but we don't really care what the price of the stock is. We care about the percentage moves, right? It could be a $2,000 stock or it could be a $10 stock. It doesn't really matter. So I think if we're above 1476 in Priceline, I think it's a buy all day, and I think we see 1800.
I got a question coming from the chat. They want to know about gold and silver. What's your take here on gold and silver? And you might as well talk about the miners as well, the gold miners.
Yeah, they're a mess. They've been a mess. I see no reason to mess with it. It's funny. As someone who I pride myself in looking at so many markets all over the world, thousands and thousands of stock charts on a weekly basis. And I look at the precious metals names, and there is zero reason to be involved, long or short. The gold miners, stay away. Gold, silver, all of them. I think they're a mess. I think they're going to continue to be a mess. Sure, can you get 50-point rallies in either direction? Absolutely. I could practically bet on it. But unless you're trying to like dance through the raindrops here in a really messy market, you're begging for headaches. You're begging for them.
What about the chemical stocks? They were talking about that just before we came on the air. What are you seeing in the chemicals?
Yeah, that whole agribusiness sort of space, both agribusiness and the chemicals, which I know, are kind of within that material space. Potash, Mosaic, Dow Chemical. I think these are names that we need to be accumulating for sure, particularly Potash and Mosaic kind of look very similar. These look like major bottoms over the last year, in my opinion. And then look at a name like Deere, breaking out to all-time highs. I think if we're above $100 in Deere, I think we need to buy it. I think Deere's probably going a lot higher. I think you could probably look at somewhere like about $120, $125 in Deere.
All right, some trepidation in the healthcare sector with the new administration coming in, but you're looking at some stocks in there, but more along the lines of medical devices. Share with us a few issues that are on your radar.
Yeah, sure. I mean, listen, I hate healthcare. I mean, it's a mess. Biotechnology, pharma, it's gross. It's been gross well before any election, well before, anybody knew Hillary Clinton had a Twitter account. These are all lies from the media. These are all lies from the media. And it's hilarious for me as a market participant to see this sort of thing. Biotechnology was down 30% before Hillary Clinton sent this infamous tweet, for the record. And then they were saying how, biotechnology was going to go down if a Democrat won. Now they're saying biotechnology is going down because of a Republican. They literally are making it up as they go along. So it really is, just from a price perspective, really humorous to see this. But most of the healthcare space is just a complete disaster. Look at it relative to the S&P 500, literally hitting multi-year lows on a relative basis this week. So, really just a space we don't like. But now when you break down the components of the healthcare space, yes, pharma, biotechnology, horrible places. But if you look at the equipment stocks, the medical device companies, they really just look totally different. Look at a name like Stryker. Look at Anthem. Both of them look very, very interesting from a risk-reward standpoint. I think you could use the recent lows over the last month, really for risk management purposes. I think if we're above 123, you could be long Stryker. I think we could see 133, 134. And in terms of Anthem, ANTM, look at about 129. If we're above 129, I think you can be long. I don't see why we can't see 190, 200.
JC, taking you back to the chat here, Rob Hood wants your thoughts on Skyworks Solution, which is SWKS. We've been quietly consolidating under $80 here for the better part of a few months here now. What do you think on SWKS?
Yeah, I've seen worse charts for sure. I really do like this consolidation. I like that bottoming process in the first half of last year. I like how we've gone nowhere since really September. I think that's constructive for sure. I think we ultimately probably break out. There's a very clean downtrend line from the October lows. I think if we're above that downtrend line, I think you could be long. I don't hate it.
JC, I know you keep a close eye on the emerging markets and the overseas markets. You mentioned the FTSE. Are there any other areas or economies, emerging markets that you're looking at on the long side?
Listen, not emerging. I mean, London is, one of the most important markets on earth, right? Is it top 3? Is it top 5? I don't know, but it's definitely up there. And we're coming out of a 17-year base, and the FTSE 100 breaking out to a new all-time high for the first time. The S&P 500 took out the 2007 highs 4 years ago, right? London hasn't done that, so it's doing it now. So I throw away every other chart that I have. If I only look at that one chart alone, I can't look at you with a straight face and be bearish of equities as the FTSE 100 breaks out to new all-time highs coming out of a 17-year base. I can't do it.
Our Forbes wants your opinion on Under Armour. UA stock is it's retail. I mean, a lot of the retail stock's been significantly under pressure here. The stock is right near its 52-week lows. UA, what are your thoughts?
Yeah, I try not to think about things like this.
I knew. I was gonna say. I was gonna put in the chat. He hates it. That's what I was.
I mean, just think about it like this. We're near all-time highs in all these indexes, as you guys know. We're breaking out to all-time highs in indexes around the world. We are in one of the most healthy market environments that many of us have ever seen. And you got this disaster. Why would you dig at the bottom of the barrel trying to buy the one stock that didn't get the memo that we're in a raging bull market? You know what I mean? Like, to me, from a relative strength standpoint, as somebody who looks at so many charts, the stuff I'm buying doesn't look like this. You know what I mean? Not to make a joke about it, but I mean, it really is. You got to laugh. I mean, it's just when you look at this compared to how stocks are doing around the world. I mean, is this really what you want to buy? That's how I see it.
All right, here's a tough one for you. Zendesk. ZEN, that's a downward dog, is taking a look at this one. This thing moves around quite a bit for a $20 stock. I'm seeing some good support at 22 and 3 lower highs. JC, anything you can glean from this chart of ZEN?
Yeah, it's a mess. I don't really know what it is, so I can't tell you what sector it's in or anything like that. So from a top-down perspective, I wouldn't be able to add any value. I've never heard of this company, but I mean, again, we're below a flat 200-day moving average. Momentum's in a bearish range. You have markets making all-time highs, and this thing, it looks like consumer staple stocks. I don't know what it is, but that's what it looks like. It's just not. Why would you mess with this?
All right. Just a couple more from the chat before we let you go. On NVIDIA and AMD, these stocks have had some nice runs and now pullbacks here. Is this a healthy pullback? Let's just go with NVIDIA here, holding on to the $100 level over the last few sessions.
Yeah, I do think it's a healthy pullback, and I like that whole space. Would I be buying the video up here? It's not my kind of trade. I don't really just chase parabolic stocks. But I like that space, that whole technology, semiconductor chip sort of area. I think that if I'm right in technology, right? So rather than just focus on NVIDIA, right, a stock that's parabolic, why don't we take a step back and focus on the group itself? And the way I look at it is I really am bullish of technology, both on a relative basis and on an absolute basis. And I got to tell you, if I'm right on technology it's not because the semiconductors are crashing. I would have to believe that in that sort of environment, the semiconductors are either participating or leading the way higher. So yeah, I can't be bearish that space. Would I be flipping the book long Nvidia tomorrow? Probably not. But it doesn't mean that I don't like the space. So just kind of want to reiterate that.
Before we let you go, you're participating in an event here at the end of the month. You want to tell us about that?
Yeah, we're really excited. It's called Chart Summit, and I really am extremely fortunate that I have really, really smart friends. These are drinking buddies of mine. These are skiing buddies of mine. Whatever the case may be, and these just happen to be some of the best technicians in the world. And basically, we kind of just all got together and created a virtual conference, and this is free for everybody to attend. All of us here have been to plenty of investing conferences over the years. Whether it's in San Diego or in New York or Florida or whatever the case may be. This is going to be virtual, online, January 27th and 28th. Friday and Saturday, go to chartsummit.com and register. It's free for everybody. And then just look at the names of people presenting. Ari Wald, chief technician at Oppenheimer, Peter Brandt, futures trader, Scott Redler, Jonathan Krinsky. Then we have some outsiders that are not necessarily technicians, but do bring great perspective on technical analysis. Guys like Howard Lindzon, Josh Brown, Phil Perlman. So we really do have a dynamic group of guys talking about technical analysis. So I appreciate you bringing it up, and it's free for everybody to attend. So we're really stoked about it.
We've been on the line with J.C. Peretz. He's the author of All-Star Charts. Thanks a lot, J.C. Pleasure talking to you, telling us the way it is. We'll speak to you again soon.
Always. I appreciate the invite, guys. Have a good one. Go get them.
Thanks, JC.
44.26, up $7.
It's just going up forever. How do you fight it? I've covered half. I covered half when JC was talking in here. I was like, you know what? I'm covering half the small position that I had. And this is, an education for me. You're always learning. You got to continuously learn for 17 years. It seems like, I'm analyzing, and you bring up a good point. I did with Allergan too. When I get like 1/4 of my regular trade, sometimes I throw risk management out the window, and you can't do that. This is a mistake on my part. I'm taking major heat on this thing here now. And, here's, just something, how much can you lose when you only got 1/4 of your normal position? Well, you're going to lose a lot when the thing just keeps going in one direction here. And here, I'm shorting it back in the 41 handle, and you're looking at a stock trading the 44 handle. So, bad, obviously risk management by me. I don't know what's happening here. Logically, it doesn't make any sense to me. But, the markets can stay irrational much longer than we can stay solvent. You can't fight this tape. Here it is, 44.42 right now. I think eventually this thing's going to pull back, but I'm probably going to be long gone on my short by that point in time. Like I said, one of two things is happening. It's either a bad algorithm, and I don't think it is. I think it's somebody that is just buying the stock.
Yeah,
some institution that just hungry for stock. The stock has already traded CSX 4.5 million shares this morning. They're relentless. Maybe it is, the person that is going to be eventually putting a takeover bid. Maybe they're coming in the open market and just scooping up a whole pile of stock. I don't know. A lot of speculation, but all I can tell you is there's somebody that is buying stock in the enormous quantity this morning.
All right. For those trying to find that site here, it's www.chartsummit.com. So I'm pulling it up on a link that Spencer gave me. So hopefully you guys...
I threw it in the chat, and I also want to highlight a tweet from Doug Cass at 7:30 this morning. It does not get wilder than CSX trading in after hours last night. That's from Doug Cass.
It doesn't.
It does not get wilder.
It was wild to watch.
All right.
I'm telling you, man, in 17, I've never seen an iceberg that aggressive in the after hours. So either that person knows something, or they just want to buy stock, or, I don't know. I'm telling you, that is the most aggressive buyer that I think I've ever seen in an individual stock in the after-hour session. Like I said, they probably bought 5 million shares. They probably bought 7-8 million shares here since the close of 4 o'clock on CSX.
Yeah, the only thing I can say is, if you're going along with this aggressive buyer, you want to see the news. You want to see some news.
If you were going with it, you were making money. Trying to fade those aggressive buyers doesn't work. Take it from me.
All right, let's
You love it when I lose money on the show, don't you?
no, Verona Systems Incorporated here. Downward dog, throwing another symbol in here. Before I say anything, I want to see if there's doing anything in the pre-market. No, kind of quiet here. To me, it's looking itchy. Looking to break out here. Had a couple run up, consolidation. Now you got a double top here it's dealing with. So gets above that 29.30 area. It looks like you got another move to the upside. Dennis, we have a few minutes left here. Any notable imbalances?
The banks, again, they were wild yesterday. Bank of America, and a lot of those were pullbacks, and they did start buying a few of them eventually yesterday. Here this morning, we got Bank of America 165,000 to sell. We also have Morgan Stanley. This one stands out. Morgan Stanley 219,000 shares to sell. That is significant. Stock is trading down about 0.6% in the pre-market, and that's probably. I didn't see any analyst action. Was there analyst action, Spencer? I didn't see anything on Morgan Stanley, so I think that's probably just the bulk of that sell imbalance this morning. Yeah. So 219,000 to sell. That's significant for Morgan Stanley. Bank of America, you see 200,000 to buy, 200,000 to sell all the time. Morgan Stanley, you don't. So 219,000 stands out, and they're hitting the stock in the pre-market just because of that opening sell imbalance there. Disney, 60,000 to sell. That's somewhat significant here. Other than that, Alibaba, 52,000 to buy. Baba's just been quietly consolidating for the last few days. I still think Baba might eventually test $100 again. That's about it. They're pretty small.
Let's take a look at the Baba here. I want to get that J.P. Morgan lunch back here. Where did 101, 90? I'll take 91. You take 101 for a lunch on
that? Sure. Look at this. Just a bet. You just suckered me into that, didn't you?
Okay, yeah, you're figuring.
I'm in. 101 versus 91.
I figure I'm fading everything that you do today.
That's a bad day today, man. That's CSX.
All right, one more here. Downward.
Threes, so that's my first bad trade in a while, so I'm due for two more bad ones, so maybe this will be one of them.
I just, downward dog is keeping us busy here. MAR, Marriott. I don't know what to make of this chart. Long consolidation.
News on it today, though. I saw Marriott. There's analyst action.
We had a conviction buy from Goldman.
Goldman, man. They were busy.
Conviction buy.
What are they? Are they getting paid by the recommendations or what?
They are busy overnight here. MAR, yeah. So it's bid up. It's bid up at 83.60 right now, which is up 60 cents. Best offer is way up at 84.70. I feel like a Goldman to conviction buy is probably worth $1, so I would be surprised to see the 84s today.
I look at the pair of highs up at 84.50 area, 84.50 to 84.69 if you're looking for an upside target. All right, what a great show here today. Dennis, I just can't tell you that, you're just a man's man here with admitting to losing trades. Can you imagine on Fast Money or, some of these shows, someone getting plowed like that and having a sense of humor? But, we're about
it happens. I mean, you got to talk about your winners and you got to talk about your losers. And there's no doubt in this trading world, just before you go, you're going to have, your wrong calls and you're going to make bad calls and you're going to deviate from your rules every once in a while. And, I deviated from my rule here, where I typically cut the losers very quickly. But because it was such a small position, I was like, you know what? Forget it. I just say, screw it. I'm just going to, see what happens here because this doesn't make any sense to me that this thing's trade at $41. It doesn't make any sense to me it's trade at 44, but it doesn't matter. I'm wrong on this trade. Even if it comes back 41, I'm still wrong. My timing was horrible. I was fighting the tape. Now, look at all the mistakes I was making. And here's 17 years. I talk to you guys about this stuff all the time, and here I still make the same stupid mistakes. I'm fighting the tape. Stock's going straight up. That's my first mistake. I'm fighting an iceberg order. I'm fighting a huge buyer in the market. I always talk about order flow, telling where the buyers and sellers and figuring out which size. Well, I'm totally fighting the big buyer in the market here in the after hours. Second mistake. Third mistake is discipline. Where's my discipline on that? To not, cover when the stock starts, blowing, a point or two against. It's crazy. So, you've got to get out when you need to get out. NVIDIA was one that I had good discipline on. I traded the NVIDIA report. I was bearish NVIDIA just for the report because tech stocks were getting hit back in November. And NVIDIA gapped up after hours 7-8 points. I'm like, it's too much. And it started moving $1 or $2 against me. I was like, I'm wrong. I'm going to get out of this. That was one of the best losing trades I've ever had because you could see that was on the night of the November the 10th. And the stock opened the next day above where I had covered at 77, opened at the low at 78.50 and ran to 88. And then we know over the next month and a half, it ran to 120 almost. So imagine, I was just stubborn and say, I'm just going to hold on in that position. You got to get out. So here, CSX, it's a big move really fast overnight. I go to bed, it's at 41. I wake up, it's at 43. But, regardless, you've just got to cover. And, I sat there, I thought, maybe it's going to come back in overnight. Maybe the company's going to say, we don't know what the hell's going on with their stock. It didn't happen. So, you've got to admit when you're wrong and you got to get out. I'm going to eat the CSX loss here. I'm going to eat it here this morning and, move on and learn from it. 17 years, you can continue to learn. And it's important to admit when you're wrong, and it's important to cut those losers as quickly as you can. This game is all about discipline.
All right, we're going to wrap things up here a minute late with Spencer. What do we got on the docket for Friday?
We got Paul LaMonica on tomorrow, one of our favorites. Writer for CNN Money, writer and columnist, and pretty much jack of all trades over there at CNN. So looking forward to chatting with Paul LaMonica. If you missed any part of today's show, the whole thing is available on YouTube. Right now, you can just rewind the show live, or you can wait for the podcast to be posted on iTunes, SoundCloud, or Stitcher. You can find that by searching for Benzinga or PreMarket. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. And don't forget, if you want a free trial of Benzinga Pro, it's Benzinga's real-time news platform. You can go to pro.benzinga.com, or you can call us up at 313-723-2000. Hope you guys enjoyed today's show. I know I learned a lot about CSX. I came into the morning knowing just the headline and not watching the order flow, and now I know a whole lot more, and this is fun. So hope you guys had as much fun as I did, and we'll be back with you folks on Friday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.